Okay, hi guys. Zaheer Anwari here on behalf of the Dynamic Trader. Can I just get a quick screen check and mic check, Maurizio, administrator? Yeah, okay, brilliant. Right, we are live and we're good to go. Okay, apologies for the late start, guys. I've had a particularly busy day today. It's one of those days where the day just seems to be getting ahead of you and you're just constantly chasing time. But managed to get here just a little bit later than planned. So, administrator, thanks for accommodating for the late time. Um, can I get an idea of how many people are actually in on the webinar, if that's possible? I know I can see a couple of people online. If you could say a hello to me, guys, if you can hear me, just so that I know you're out there and there is someone listening at the other end. Um, So just to give you a brief background of myself in the meantime, my name is Zaheer Anwari. I'm a trend trader. I've been trading since 2007. Hi, Jay. Brilliant. Thanks for coming in. I've been trading since 2007. I trade all the markets, so foreign exchange, stocks, commodities. When it comes to stocks, I trade UK and US stocks. I basically go to where the money is. I don't get fixated with any single currency, such as the euro dollar or an instrument like gold or oil. I'd like to keep my trading very simple. I like to do as little work as possible for as much profit as possible. And the best way to really go about this is trading long-term trends. So when you're in the right direction of the market and the market keeps on going either bullish or bearish, you just want to keep on holding onto those positions. And when you start returning a profit, you then want to start doing something which is very unnatural to the way we are trained to make money, which is you actually want to start adding more risk, or another word for this is compounding. So if I'm in the bullish direction of the market and the market does go bullish and my 2% risk typically becomes 2% profit, 4% profit, 6% profit, the natural reaction for most people is to then bank that profit. Usually they're working on some kind of risk to reward, 1 to 1, 1 to 2, 1 to 3, whatever it may be. When I'm on the right direction, when I'm in the right direction of the market and my trades start returning me a profit, I don't actually bank profit. What I do is I add more risk. So I will add another 2% risk. I'll start buying more if I'm going bullish, or I'll start adding more short positions if the market is bearish. And if you look at all the best traders and investors over the years, they've embraced compounding, and that's one thing that I learned when I started trading in the beginning, which is if I want to make growth, if I want to make money without having to chase money, then compounding is the way forward. So I read books like Reminiscence of a Stock Operator. If you haven't read this, read that. It's based on Jesse Livermore. If you don't know about Jesse Livermore, I suggest get to know Jesse Livermore. Read Reminiscence of a Stock Operator. Read Way of the Turtle by Curtis Faith. Read How I Made $2 million in the Stock Market. These guys all talk about how they traded, and the common approach that they all have is trading long-term trends, ignoring the news, focusing on price, and whenever they're in a winning position to keep on adding more and compounding. And that philosophy has really been lost in recent years, and that's because of day trading and software and scalping and just the internet really encouraging private traders to go down this route of in out in out in out, be quick, chase money, 10 pips a day, that's all you need. I mean, people need to be a little bit more realistic, because the failure rate of trading is massive. We know that the failure rate is huge amongst private traders, and this isn't because of ability. We're all able to do this. There's nothing particularly special about me, but what I do have is this ability to really kind of figure out what is the best way forward. I don't allow marketing to cloud my decision. I don't allow images on Instagram like fast cars and all of those kind of things. I don't allow those to cloud my decisions. I focus on what's important. What is important? Knowledge. I focus on my goals and what I want to achieve. I focus on realistic timeframes. I focus on wanting more time. Okay, if I want more time, how am I going to achieve that? And all of these goals are very realistic. It just requires you to have a very particular approach. And for private traders, trend trading is definitely the way forward. So that's what my webinars are all about. Slow and steady wins the day. Compound growth. Embrace compound growth. It's powerful. Okay, let's move on. Let's get into the charts. Foreign exchange, again, it is pretty much dead at the moment. We will go through some of the charts. Before I actually get into the charts, guys, I did a training session on Monday, which was Monday 6th, which they're just gone. If you're here in the UK, if you're in London, I did a training session on Monday. See if I can bring up an image. There it is. So I did a training session on Monday. I tend to do small classes. There were only 20 people in the class, but you can see, fully booked. I'm doing another session on the 23rd of March. If you're here in the UK, if you're in London, then please go to this link, which is zaheer.live/seminar. You can actually do the same thing online. So if you're not in the UK and you want training, then it's zaheer.live/apprentice, and it's £99 for the month. Great value for money. You get training in stocks and currencies. You get strategies, breakout strategy and a pullback strategy. You get a whole month of community support. You get actual watch lists of what to trade. This is where people really need to be fully aware of what good trading is about. Good trading is, first of all, knowing what you're doing. So good technical analysis. That's the first point. The second point is then once you know how to do good technical analysis, what you then need to understand is what is the right strategy to use in the right market conditions. Again, something that most private traders get very wrong. Most traders are a one-trick pony. They only have one approach. That's not the way to the market. The market moves, it's organic, it moves in different ways. You can have fast moving trends, you can have slow moving trends. So if you have a fast moving trend, so let's look at something like Nvidia. Administrator, can you see my chart by any chance? Just double checking. I don't want to go ahead too fast without. So Maurizio, if you could tell me, can you see my eSignal software? Yes, okay, fantastic. Okay, so if you look at something like Nvidia, and if I just take Nvidia back to this point here, you can see when price gapped, look how quickly this stock moved. Yes, there were these little pullback periods where you have to learn to hold, but when trending, look how quickly that has moved over the last year. This is a very fast moving stock. Now it's going through a bit of a consolidation, which is expected. But the point is that it moved very, very quickly. If we compare that to, let's say, the stock of AMAT, Applied Materials, you can see a much slower moving trend. The pullbacks are deeper, consolidations tend to be a little bit longer. There is a direction to the stock, but it's much slower. So the way I would trade Nvidia, which I am long on, and I've been long on since May of last year, so I still have my positions running, and I'm also long on AMAT. I have long positions on this particular stock. I've been long on AMAT since this area here, which goes back to August of last year, and I'm still in this trend right now. So I have multiple long positions running. These are all in good profit, handing out very good profit. So the way I've traded Nvidia is very different to the way I've traded AMAT, because the trend structures are different. The way price is moving is different. You do not want to be a one-trick pony. You want to be able to understand what market conditions you're in and then be able to use the right strategy for the right market conditions. So first of all, you need to be able to understand good technical analysis. Most people do technical analysis very badly. You then need to have various strategies within your arsenal to be able to use the right strategy in the right market conditions. Once you've understood your strategies, that then comes with understanding risk management, entry points, your initial stop loss. How are you going to calculate it? When you're in the trend and the trend develops, how are you going to compound? What levels are you going to hold price towards? Right? Instead of having fixed targets, you want to have levels. So instead of having a 1-to-1 ratio or a 1-to-2 ratio, you want to have a 1-to-infinity ratio. Remember the logic, guys. The trend is your friend until the bend at the end. This is the underlying philosophy of good trading. The trend is your friend. Let your winning positions run. That is the underlying philosophy of good trading. Let your winning positions run. Cut your losers short. But all too often, people have that whole philosophy the wrong way around, because human nature is this: once you make a bit of money, bank it. When you're in a losing position, hold and hope for a reversal. That's why private traders blow their accounts time after time, because their whole approach to trading is upside down. What you want to do is, when you're in a losing position, cut it out. Have a well-placed stop loss. Don't risk more than 2%. If the stop loss gets triggered, get out. That's it. That's a losing trade. Losses are part and parcel of trading. Trading is all about probabilities. Whenever I enter into a market, I'm entering into an environment where I have more chance of making money than losing money. So when I entered AMAT, which was around this area here, based on my criteria, when I entered, what I was saying was, right, my entry's up here, my stop loss is somewhere down here. When I entered into the market, what I had established, according to my analysis, was an environment where I had more chance of making money than losing money. And you can see that the market just stayed range bound for a while. It came back quite against me here, and that's expected when a market gaps. Sometimes the price comes to fill the gap. That's why my stop loss was below the gap. And then the market has now started returning me a profit. And because I've been patient, and yes, that is quite a lot of patience, August until November, before we had the breakout and price started moving. So quite a lot of patience involved. But the profit here that I've accumulated is far greater than a profit than most day traders will accumulate before eventually blowing an account. So what tends to happen with short-term traders is that they make money, lose it, make money, lose it, frustration kicks in, and then they blow an account by over risking. Whereas by allowing your positions to run and then compounding into them, the accumulated growth is fantastic. And when you have several stocks all doing the same thing, so I'm also long on BA, Boeing. So you can see how this stock is now in a bullish run. What else am I in? BAC, which is Bank of America. You can see this is now in a bullish run, nice bull run to the upside. So when you are able to understand how to hold and let your positions run, trading becomes far simpler. It should be a very pleasant journey. If you're stressed, if you're worried, if you're constantly looking at your mobile phone, then you're doing something very wrong. And these are the approaches that need to change. Okay, so this is all part and parcel of good trading. I know I've digressed a little bit, but what I'm trying to do is question from YouTube: isn't there a double top in Nvidia? Yes, good question. So let's go to Nvidia. I understand what you're saying here. The double top at the 120 round number. Yes, potentially that could be a double top, but if you look at it on a bigger scale, all this is doing is going sideways, and it's using the $100 as a support zone. So if I draw my line there, you can see that when you understand support and resistance, it's easy to be able to allow the market to pull back against you. So the amount of profit that I've accumulated from here to here is substantial. This is a staggering amount of growth that I've achieved on my account. Yes, if I got stopped out here, I'd make more money than being stopped out here. But the money that I've made here is far greater than what any bank or institution would give me. For me, I'm not focusing on the money. I'm focusing on my process and my rules. Okay, so because price broke above $100 and it had been in a nice clean trend, there was bound to be an area of consolidation. And a double top is not as strong as a double bottom in a bull trend. So yes, we do have a double top, but that double top will only be of any significance if price starts to weaken further. For now, I still have my long positions open. So my first long position was opened here. I've repeatedly compounded throughout the trend. These positions are all still open. I have my stop loss somewhere down here. If I get stopped out, I've accumulated a very, very good profit. And just to give you an idea, it's in excess of 50% on my trading account. So if I get stopped out here, wherever it may be, the locked in profit is over 50% on my trading account. So let's say, for example, if you had £10,000 in your trading account, this stock has returned me in excess of £5,000 on my trading account. And this is with a small 2% risk on each compounded position. Okay, so what does that tell you? What that tells you is you only need to have one good stock or one good trend a year to make very, very good money. But the nature of the market is that there are multiple trends across all markets. You've just got to be able to identify where they are. That comes with knowing what you're doing. That comes with good software. Where a lot of people go wrong is that they're too fixated on foreign exchange, and foreign exchange is dead. Another stock of mine that has performed very well in 2016 is Boohoo. So if you look at Boohoo, there you go, guys. Bullish run. It's a monthly chart, just so that you're aware. This is the monthly chart of Boohoo. So each of these candles is a month. Now it's trading above 150. This is significant. If you look at the daily time frame, you can see the trend to the upside. I got stopped out around this level here on this pullback. I got spiked out, went through consolidation. I then entered another position here, and we can see now this has gone on a run, pullback, another breakout. So you can see, guys, by understanding support and resistance, look, if I put my level here, you can see that, and if I do another one here, okay, look at what happened. Price broke out. Actually, let's use the highest point, which is this part here. Okay, price broke out, pullback. Look at the pullback into this zonal support area. Then we had another breakout, and then we had another pullback to retest this area. Then we had a bounce up, and now we're having another pullback to retest this area. Remember, support and resistance levels are zonal areas. They're not hard levels. So don't expect price to be pit perfect onto these levels. These are zonal areas. But the point is, when you understand support and resistance, it's very easy to allow yourself to get triggered into a trade and then just hold. All I did during this pullback was hold. Now it's breaking out again. This allowed me to enter another position. So I've got another compound running. When this moves and then breaks out, I will then look to add another position at some point. It's far simpler. It's a far simpler approach than just opening and closing positions willy-nilly on currencies without really understanding what market conditions you're in. Okay, so this is all part and parcel. Do you see more upside? I can't guarantee there's more upside. For me personally, I don't know what the market's going to do next. Neither should you. Like, no one knows what the market is going to do next. Do I see more upside? Yes, possibly. Do I see market going to consolidation? It could. Could it reverse? Yes, it could. If it reverses against me, I have my stop loss in play. If it goes into consolidation, I'll simply hold. If the market breaks out to the upside, I'll start compounding again. I don't try and guess. I don't have an opinion. I simply let price dictate what I'm going to do. And this is what private traders must start understanding. You don't need to understand what the market's going to do, because trading is about probabilities. When you have the odds in your favor, the likelihood that the trend is going to move in your favor is high. It's not always going to happen, which is why you risk small and which is why you cut your losers short. But when you are in a winning position, hold and compound. Get away from day trading. Okay, so this is all part and parcel of the training, guys. So check it out, Zaheer.live/seminar if you're in London, in the UK. If you're online, please check out the same link, Zaheer.live/apprentice. So seminar and apprentice. Also, if you haven't checked out my Medium blog, I talked about, yesterday I put up a blog. I put up quite a lot of tips and look at pivots for support and resistance. So if you haven't read this, I talk about the importance of support and resistance here, lots of examples within my Medium site. So just go to medium.com /@Zaheer Anwari. Okay, so let's go to foreign exchange, because it is FX Street, and foreign exchange is a big part of what FX Street cover. So let's have a look at the FX Street market. Let's have a look at the FX market. So this is a typical setup of mine. Watch list on the left. Notice big watch list. I don't have just a single currency like the euro dollar. I have everything. And what I do is I identify where the money is and I go to the money. Okay. Monthly is all about support and resistance. Weekly has the 200 moving average and the dynamic trader trend filter. So if you notice, I don't have standard red and green candlesticks. I have red, black, and green. Red to highlight bearish trend, green to highlight bullish trends, and black for consolidating markets. When the market is below the 200 moving average, I want the trend filter to be red. If it's above, I want the trend filter to be green. If there's any other combination, then I'm not interested. So for example, below the 200, and here we have red, green, and black. It's not what I'm looking for. Below the 200, I want it to be red. And the same on the daily time frame. Below the 200, I want it to be red. Above the 200, I want it to be green. The way to look at this is, guys, is that the weekly is big brother, the daily is little brother. Whatever big brother is doing, I want little brother to be following. So if big brother is above the 200 and the trend filter is green, I want the daily to also be above the 200 and the trend filter to be green. If the weekly is below the 200, so if we look at something like the pound dollar, so the pound dollar is below the 200. The trend filter has now turned red so far this week because we're seeing weakness. If you go to the daily, below the 200, trend filter is also red. So it's looking good between the weekly and the daily. Below the 200 on the weekly, below the 200 on the daily, red on the weekly, red on the daily. I'm actually short on this. I've been short since, where have I been short since? I think I've been short since around this level here. I can't remember. So I entered in on a pullback and I'm still short on this position. This is now in good profit. If I'm looking to compound, I want to see this low point cleared. And we can see that price is now weakening. It needs to clear 1.2 and this pivot support, which goes back to October of last year when there was that fat finger incident, I believe it was. Okay, and we can see weakness. Look at weakness. Slowly but surely, the pound is really starting to weaken again. So it's just been sat in this consolidation, but we need to see a breakout. On the monthly, what I'm looking for is for price to be trading outside of the pink line. So you can see that we've got the high and the low. This represents the annual levels. So that's the high of 2016 and the low of 2016. In general terms, when price is inside the pink lines, I don't take trades. I stand aside. What I want is to see price trading outside of the pink lines. So either above the high where we have a bullish bias or below the low where price has a bearish bias. If price is inside the pink lines, then generally what I do is stand aside, because trading is all about developing an edge. It's all about developing environments, as I said, where you have more chance of making money than losing money. Okay, where you have more chance of making money than losing money. Inside the pink lines, there is no confidence for that. So what I'm looking for is price to break and close below this pink line to suggest further weakness. Okay, so that for me is my criteria, and that is what defines my edge. If someone says to me, what is your edge? I can explain to it. I can explain to someone very clearly what my edge is. You must have an edge. If you can't explain your edge, you don't have one. And if you don't have an edge, you will get eaten by someone who does. This is what trading is about. Okay, so if you look at all the pound currency, if you look at the whole market in general, everything is trading inside the pink lines. Pound Aussie dollar, it's inside the pink lines. Euro pound, inside the pink lines. Japanese yen, inside the pink lines. Swedish krona, inside the pink lines. So all in all, the foreign exchange market is not looking very interesting. Euro dollar, inside the pink lines. Aussie dollar, US dollar, again, inside the pink lines. So until these currencies start breaking out, I'm not really interested in trading them. But if we go to stocks, if we look at AMAT, Applied Materials, if I expand it, there is the high of 2016. And you can see this is now this is trading above the high, and I'm long on this. If I just bring up the pink lines of last year, Okay, so there is the high of 2016 as we're in 2017. This is the high of 2015. And you can see when price broke above $30, which is where I opened my first long position, it was above the high of 2015. Okay, so that is the first thing that I really look for, is for price to be trading outside of the annual levels of the previous calendar year. These aren't, by the way, just be aware that these pink lines, they're not Donchian channels. These aren't rolling 52-week highs and lows. This is January to December 2016, the previous calendar year. Okay, so if we look at Nvidia in comparison is trending inside the pink line. So there is a high of 2016. There is the low. Look at the distance between the high and the low. Massive distance from below, from around $25 to $120. So that's almost $100 distance. At the moment, price is trading inside the pink lines. So we need to see price reverse, breaking close above 120 and the high of last year. That will then be further entry points. If you look at some other stocks, USB, this is another stock that I'm long on, above the high of last year, above $50 as well. Significant. So it's above $50. It's above the high of last year. I would like to see this move all the way to $100. That is my long-term vision. It may not happen, in which case I look at every other round number, 50, 60, 70, 80, 90. But ideally, I want to see price move towards $100. LUV. So I was long on LUV back in 2013, 2014. You can see here, very good stock, top performing stock. After every move, just short of $50, the market goes into consolidation. And you can see right there, price came to retest $50, bounce back up. So it's really showing you the significance of this half figure. And then we had this next bull run up. I entered a long position above the high of last year, and it's now finding a bit of resistance at 60. But this is not a trend reversal. If you look at it from this point here, green bar, green bar, green bar, green bar, green bar, green bar, there was bound to be a red bar at some point. That's just the nature of trading. You cannot expect it to just shoot in one direction. Okay, but I am long on this. And if you look at the weekly and the daily, above the weekly 200, trend filter is green. Above the daily 200, trend filter is predominantly green. Yes, there'll be areas of black and red, but that's because there's just a lot more candles. The more candles there are, if you compare a daily that has five candles for 1 week candle, it's just ridiculous that people want to go down to a 1 hour time frame to trade. If you're trading on a 1 hour time frame, you're dealing with 24 candles in a single day. It's madness. And you guys have to be looking at the chart every hour. If you're trading on a 15-minute time frame, that's 4 candles per hour. 24 times 4, that's 96 candles in a day. Unbelievable. I really admire people who really put themselves through all of that trouble to make a bit of money, when there is a far simpler approach, a far more steady and pleasant approach, and actually a far more profitable approach, one that actually empowers you with not just money but also your time. Because ultimately, trading is not just about money, it's about a lifestyle. It's about having the time to be able to spend the money. There's no point in making money being glued to a screen looking at candlesticks all day if you're only going to be able to enjoy that money in the evening. In which case, you might as well go have a job. At least you'll be around people and you won't be staring at candles all day. So there is a much smarter approach to trading. It's just private traders are not allowing themselves the real chance of what trend trading can bring them. Okay, so I think that is everything. Let's have a look at one more stock. Micron Tech, actually not Micron Technology, MO Altria Group. So this is another stock that I'm long on, and you can see nice bullish run above the high of last year, and it's now on a run to the upside. Above the weekly 200, trend filter is green. Above the daily 200, trend filter. Look at the stock. Look at the quality of this stock. Really nice looking trend. So if you enter, let's say we entered on this breakout here based on the highest point. We broke out and we entered here with a well-placed stop loss. Even with this bar here, which was earnings, so every 3 months earning comes out, that's bound to be a little bit of unusual movement compared to the trend. That's what happened, got absorbed into the market, and the trend continued. Another stock that I'm in is CNP. If you look at CNP, we had the same thing. There's your earnings release. So it gapped down, filled up, and then continued. And if you look at the movement before then, nice linear trend. I've got multiple positions running across this trend. If you look at the monthly chart, plenty of space to the upside. Trading is all about risk to reward. Small risk for a big reward. Okay. Question from YouTube. Hello, can you do analysis on US dollar, Canadian dollar? Trading 3 people here with us right now. Oh, fantastic. Great. Hi guys. I cannot see. Obviously, I cannot see who's on YouTube. So, in a way, sometimes I feel like I'm talking to myself. But it's great, Marita. Thank you for letting me know that there's people out there, and thank you for posting the questions. Yes, I can definitely do analysis on the Canadian dollar. Hello, Zaheer. As trend following trader, did you advise to check one of the currency slope strength on the daily or weekly time frames? Yes, definitely. The monthly, weekly, and daily time frame is all part and parcel of my trading. Okay, it's fundamental to my trading. So the monthly chart. So let's break this down so you guys are really aware of how I use my chart. So hopefully you guys have pen and paper. So I look at 3 time frames: monthly, weekly, and daily. Okay. I don't really look at the 4 hour, the 1 hour. It's just unnecessary. It's just too much work for me. I'm extremely lazy. I want to do as little as possible for as much as possible. That's just that's how I've managed to get trading to work for me. And I find that best operates on the monthly, weekly, daily time frame. Monthly is all about support and resistance. So the red and the green lines that you can see on the charts, these are all what I consider key support and resistance levels. So I have a tool with an algorithm programmed into it that will highlight major pivot levels. And the logic behind it is very simple. A high bar with a minimum of 10 bars on either side. That is what I would consider a major pivot. Okay, trading is all about rules. As private traders, guys, we must create rules. If you don't create rules, you'll never have a structure to your trading. And we do have an advantage because if you look at institutional traders, they have government rules and regulations that they need to follow. As private traders, we don't, which means all of us, every single one of us in the market who's a private trader is an alpha. And if you can't control your alphaness, you're going to get burnt. And this is why so many private traders get burnt, because they do not have rules. Now, when I started trading, I was not in any position to create rules. The reason for that is because I didn't really understand how to create rules. And secondly, I didn't have the time. I was busy. I was a photographer. I was an English teacher. I was working many hours. I was making very good money. I just didn't have the time, which is why I went down the route of mentoring, because I wanted someone who had rules that worked, who could give me the rules and I could just put it into practice. For me, it's not about getting this right. For me, it was about making money. Most people want to get this right. It almost becomes a kind of battle, beat the market, defeat the market, take the market on. This is a war. It's none of that. This is simply about, look, I had X thousands of pounds saved up in a bank. The bank wasn't giving me anything. I didn't want to just go and buy a house because that would mean all my money into a deposit, which is not really growth. I just simply wanted to understand how to make more money from the hard-earned money that I had, and trading really resonated with me. So what I wanted was someone who could teach me the rules of how to trade properly. So here's one of my rules, which I didn't create this rule. My mentor created this rule, which is a high bar with a minimum of 10 bars on either side. Now, the tool that we have on this screen automatically counts pivots. And as soon as it detects a pivot with 10 bars on either side, it will start drawing red lines for resistance and green lines for support. So you can see here, we got a green line. That's because there's 10 bars on the left. As soon as the 10th bar was detected on the right hand side, the software automatically started plotting levels, support and resistance levels. So that's what the monthly is for support and resistance, and to also look at the history of the chart and look to see if it's trended well. So if you look at this particular stock, it's trended very well in the past. It has nice trends. So if there have been nice trends in the past, there's a very good chance that it's going to trend well in the future. So if you look at something like the Aussie dollar Swiss franc, for me, this is not a very good looking chart. It's all too messy, it's all too choppy. They're not really clean trends here. So going forward, the likelihood of good trends, yeah, we had a good trend here, maybe a bit of a trend here, but the reality is all very choppy, very spiky. This is just not a very nice looking chart. So if the Aussie dollar Swiss franc set up going forward, I would question whether I actually want to trade it based on the history. And if I did decide to trade it, I would definitely reduce my risk, because there is a good chance that this could spike against me. So I wouldn't allocate a full 2% risk. I would allocate 1% or 0.5%. Okay, so that's what the monthly is for. The weekly and the daily, as already mentioned, is all about trend, direction, and alignment. So the weekly, I want it to be above the 200, and I want my trend filter to be green. And on the daily, I want it to be doing the same thing, above the 200 and the trend filter to be green. Now, this should answer the question. If the trend filter on the weekly time frame remains green, then I'm not too worried about what's happening on the daily time frame, because there's more candles. So if you look at this area here, this whole area here, the trend filter goes from green to black to red to black to green, and then it continues on this trend. Whereas if you look at that same area here, it's remained predominantly green, a little bit of black, but then continued. There was no red. So as long as there's no red, black for me means we could just be in a bit of a consolidation or a pullback. So as long as the weekly trend filter remains a solid color, I'm not worried about what's happening on the daily time frame, because it's just noise. Okay, and that's how I use my charts. That's how I do analysis. So if we apply that same logic to the US dollar, Canadian dollar, US dollar, Canadian dollar, we can see, first of all, it's inside the pink lines. It's messy. It's in an area of consolidation. This is consolidation. This is a trend. Not the cleanest of trends, but this is a trend. This is a consolidation. If it breaks up above this high point here and then it moves towards here, then maybe I may look to take some long positions. But for now, this is not looking interesting. If you look at the weekly, above the weekly, trend filter is green. Now what you have is a resistance point here. So at the earliest, this is the resistance that I would like to see price clear. A breaking close above this resistance, and I will look to start looking for long opportunities. And I understand why the question has come, because there's been movement to the upside, but that's not something that excites me. You know, I'm not interested in catching tops and bottoms. This is where a lot of people go wrong. They want to get in perfectly at the top and perfectly at the bottom. And, you know, when they start seeing movement like this, they want to jump in and start chasing the trade. The reality is this: you've got resistance here, and we're not too far off resistance. There's a very good chance that the market could go up, find resistance, and come back down again, in which case, what profit have you made? So for me, I'm not really in a rush to take any trades on this. I would rather wait for this resistance level to be cleared, for resistance to become support. So once price is above here, resistance becomes support, and then look for long positions. Guys, one of the key skills to a good trader is patience. But what you are taught, and you see it time and time again, is, hey, don't be patient. 10 pips, 10 pips, 10 pips, scalp, 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 scalp. That's what you're taught. But that's not what makes a good trader. A good trader is one that allows high probability environments to appear and then executes a strategy. And then when you're in a winning position, to hold and to compound. Patience is part and parcel of what makes up a good trader. Warren Buffett repeats it. Why would you not want to listen to Warren Buffett's advice? Even Warren Buffett says he doesn't predict tops and bottoms. There's a famous quote by Warren Buffett, which is, in the stock market, it barely rains, but when it rains gold. As a perfect example, what Warren Buffett is saying is that the market can be very quiet for a long period of time, and then boom, it just explodes. And then when it explodes, it's handing out a lot of profit. But what private traders are doing is starting off with £1,000 trading account and looking to day trade that to 10,000, 20,000, 100,000. Warren Buffett makes 20% a year. He's done that consistently year in, year out. He's 20% a year. Yet for some reason, private traders seem to think that's not enough. When you've leveraged an account, when you've leveraged a day trading account from £1,000 to £5,000 in a short period of time, what you've then got is the bug. even though most private traders, I spoke to a friend of mine, he called me the other day, and he's finally acknowledged that he needs help. And he started with 20,000, and in a short period of time, he grew his £20,000 account to £71,000. But now his account is less than £15,000. So he's lost all of that money, and he's down on the initial £20,000 that he started with. And it's taken that for that to happen, for him to come to me and say, well, listen, I think I need some help because I don't know what I'm doing. Anyone can make a bit of money in trading, but very few people can consistently grow an account year in, year out. Okay, so don't get caught up in that. That's my advice to you guys. US dollar, Canadian dollar, yeah, looking interesting, but for me, not until it breaks out of consolidation. I hope that answers your question, Khaled. Gentleman who asked about the US dollar, Canadian dollar, MZX81. I hope that answered your question. Sonam Ozder, what is the best time frame for Forex to trade? I think I've answered that. Monthly, weekly, daily. It doesn't matter whether it's a currency, a stock, or a commodity. It doesn't matter whether it's a UK stock, a US stock, a Polish stock, a South African stock, a Canadian stock, an Indian stock, a Brazilian stock. It doesn't matter. The way to look at this is this. A chart is a chart. If I gave you a chart and you did not see the ticker symbol, so you wouldn't know which market it was from, you should be able to look at that chart and say whether it's tradable or not without really knowing which market it's from. A chart is a chart, okay? Question. So I hope that answers your question there, Sonam Odzer. From YT, are you talking 200 EMA? Okay, so this is exactly what I mean, guys. Okay, the question is, am I talking 200 EMA or talking 200 SMA? Right. Let me answer this question for you. This is SMA, right? So on my chart, I'm using the simple moving average. Okay. So what I'm going to do is I'm going to go into the back end. Actually, let me bring up another moving average. So the moving average that I'm using is a proprietary moving average. So let me remove that. Okay, so here is the 200. And so there is the 200 simple moving average. There's the 200 simple moving average. Now what I'm going to do is I'm going to change it from simple to exponential. Okay. What difference has that made on the chart? There's simple, there's exponential. Simple, exponential. The point is there's no difference. There's no difference to simple and exponential. It's these little details, which are actually insignificant details, that private traders are getting caught up in. What you should be asking are questions like, how do I establish high probability environments? How do I calculate what good stop loss is? How do I understand target levels? How do I find alignment? I keep blowing my account. My risk management is off. Can you explain to me what is good risk management? Can you explain to me how to calculate a stop loss on the euro dollar compared to the stop loss on the pound Japanese yen? These are the questions that should be asked, not is that 200 moving average simple or exponential, because it makes no difference. The exponential is more weighted to current price action. It's the only difference. But I keep it simple and I use the simple moving average. Okay, I hope that answers that question. Okay, I'm just conscious of time. Okay, brilliant. Thanks, YT. Pound Swiss franc in alignment. Yes, correct. All the pound currencies are in alignment. Okay, all the pound currencies are in alignment. The only downside is that they're inside the pink lines and they're currently going through an area of consolidation. So until we get the breakout, this is not something that's tradable. It's below the 200 moving average. But look, the trend filter is black. It's just going sideways. And if you look at the daily, below the 200, but the trend filter, red, black, green, red, black, green. I don't want areas where the trend filter is continuously changing. I want solid areas. So pound Swiss franc is not the best example, but here you go. A solid example of green, black, because the pullback's quite deep, but solid color. So if we go back to the chart of NVIDIA and it goes to the daily time frame, you can see how it's predominantly green. Yes, there's areas of black and red, but it's predominantly green. And if we go to the weekly time frame, the trend filter has been green since start of 2016, all the way through to the start of the new year, before we then started seeing a reversal, or the end of last year rather. That is what you should be looking for: solid colors, solid direction of the trend. Okay, right. I think that's everything. I think that's everything, guys. Okay, so if you have any questions, I'm going to put my email here: zaheer@zaheeranwari.com. It's just my email, okay, my name rather, zaheer@zaheeranwari.com. If you have any questions, if you want more information on the training and how to join the Dynamic Trader community, zaheer.live/seminar. As part of this training, I should mention, guys, you get access to the trend filter. So you get access to this page, the trend filter, and the logic behind it. So it's not just here is software, go follow it. It's here are some software tools. This is the logic behind it. This is why we're using this software. This is why we're using this trend filter. This is why we're long. This is why we're short. You get the logic and the reasoning and the education behind it. This is not a signal service or a robot. People need to get away from that. People need to understand there's nothing more powerful than what is inside your head, which is your brain. When it comes to trading, what you want is a combination of good software tools and the ability to apply knowledge and human discretion to your trading to be able to make good decisions. Algorithms are flawed. Algorithms are flawed, guys. And I'll tell you why algorithms are flawed. Algorithms only work if you have the funds of a bank. And the reason for that is because small moves will then equate to large sums of money. Algorithms are not intelligent enough to be able to deal with the changing nature of a trend. If you look at this trend, move, consolidation, look at this leg up. This leg up is longer than this leg up. This leg up is longer. And if you look at this consolidation, the pullback here is slightly deeper than this pullback here. Then we had another pullback, a breakout, and then this pullback. So we had another pullback in quick succession compared to the first two legs. Then we had a move up, bit of a consolidation, then this big gap, consolidation, then another run up, then a deep pullback. Algorithms aren't intelligent enough to deal with the organic nature of price. You are. And the way you will be able to do that is by understanding how to manage stops, how to look at levels, how to let your winning positions run. And this comes with understanding the markets, understanding high probability environments, understanding price action, having good software and good training. You put that all together, you'll be powerful. You're just allowing people to direct you down a route which is not the best route for us as private traders. Okay. That is everything. So, Khaled, cheers, Khaled. You're very welcome. Okay. Have a lovely end to the week, guys, and I will see you all next Wednesday. Okay, be smart, wait for the breakouts, be patient, be clever with your risk, and let the money come to you. Okay, see you all. Take care. Bye-bye.